One of the wildest fights that we've ever seen online is currently happening. Trump versus Elon, and it's spilling over into the stock market with over 14% down in just one session on Tesla, and it's smashed into put support. But is this starting to affect other assets? Bitcoin fell through and silver is going absolutely ballistic. And as we've mentioned for the last 2 months, we thought that we might be in for a squeeze. So what exactly is happening, and are we at the calm before the storm? Well, according to the VIX structure right now, something weird is happening before this Friday's non-farm payroll. In today's video, we'll break it all down together as we cover stocks, commodities, and cryptos. This one's not to be missed, guys. Let's get into it right now. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. What exactly is going on with Tesla right now and Elon and Trump, and of course, some of the squeezes that we've started to see appear, along with the volatility in the VIX. There's something weird going on into this Friday's results. Just a quick piece of housekeeping. Thank you so much for bearing with me over the last 2 days. We were running a seminar here in Australia, and of course, we're now back full time. So thank you so much, guys, for watching the videos, supporting the channel, and obviously we've got a lot to talk about as we catch up on some of these events. Let's first start off, though, with this Elon versus Trump saga and how it played out over the session. The first post, Trump, I'm very disappointed in Elon, and then Musk came back, without me, Trump would not have won the election. And then he said after that, such ingratitude. This, of course, got everyone really fired up. On top of that, then we saw Trump say, I asked him to leave and he just went crazy. And then Musk said, such an obvious lie, so sad. And all of this basically had a massive effect here on the stock price throughout the session as we saw shorting and shorting and shorting go through. We did have a private stream for the open, and I suggested that we might have been heading towards 300 or maybe 280 over the next coming sessions, maybe 300 in that session and 280 in the next one. But I tell you what, it went faster than anybody expected. And it got even worse than this, of course, if you want to go check it out. There is a whole bunch of drama going on over on X right now. But what we're probably more interested in is where are the flows? Are there opportunities in this madness that's going on right now? Well, of course, it comes back to where are the options? And we've known for a long time that 300 and 280, 275 probably marks out the largest level of overall options in this stock. And of course, 275 is now the 0 DTE level, and the general put support seems to be around 280. So is this the bottom for Tesla? Well, we did see the market start to pick up this area, and now, of course, we look for structure. And we'll look at the stock a little bit later on in today's video so that we can see whether we do have structure around these points. But the next 24 hours, as you can see here, the options market is expecting a large move. Almost 300 on the top side and around 270 on the bottom. So basically, implied volatility is high for this stock, as I'm sure we're going to continue to see a lot of out of market tweets, or whatever we call them now, X posts and everything else. To make matters even more wild, we have 2 big events coming. Of course, we saw that Trump and Z had a potential phone call, and that may also start to lead into the weekend. The markets did react off that, going up about 0.4% on the S&P 500 before pulling back into that area. But the structure on the VIX is doing something very strange into non-farm payrolls. Now, we've seen this quite a few times, but I'll just explain it to you guys so you can get a bit of an idea. So this is what we call the VIX going into fully backward dated, which basically means that the short-term volatility is much higher overall than the long-term. This is signaling a market concern in the near-term risks. I wonder what that could be. It's got to be these jobs numbers, and we've got an interesting precursor to that in a moment. And of course, this is now pretty extreme. So basically, we don't see it very often. When it does occur, it means that that piece of news matters more than normal. And I liken it to really when we see those earnings results. Of course, on the channel here, and if it's your first time here, make sure to subscribe. During earnings season, we provide the options volatility. Sometimes on a stock like NVIDIA, it could be as much as plus or minus 8%. And basically, we see the stock move in that area. Generally, the options will imply that that is generally the expectation and that markets will move around 8%, 68% of the time. Now, this is the same type of thing that can happen into economic events. And according to at least the market, they do care about this non-farm payroll result more so than usual. So expect volatility and potentially some large moves. Remember, non-farm payrolls comes out 1 hour before the New York market open. It could be a bonanza of opportunity. Often non-farms is well known to go in one direction and then split and go into the other one. So again, it can be a bit trappy. Now let's talk about, of course, one of my favorite metals and maybe our favorite metals on the channel for a little bit here, which has been a slow burn, no doubt. So we've been talking about this for 1.5, 2 months, which has been, of course, silver starting to play the catch-up game. Now, it just broke to a massive high, which we haven't seen since 2012. So, of course, silver is on its run. And what tends to happen is we see gold rallying first, which, of course, it's done, and silver can be the catch-up metal. Remember, we have basically 3 pillars of geopolitical risk kind of hedging at the moment. We've got gold, the traditional asset, silver, again, a partially traditional asset, and then also Bitcoin. And what we noticed about a month ago is gold was signaling that Bitcoin should go, Bitcoin then went. Then we saw silver fall to historically low levels in comparison to gold, and then now suddenly silver is going. We've also seen silver junior miners, these are of course stocks, and gold miners as well, juniors in particular, going ballistic. And if you're looking at it, junior miners relative to silver ratio, boy oh boy are they cheap. Now, the thing about stocks, in particular gold or silver miners, is they often sell their bullion for cheap rates in the future. So you can't just say, oh, this chart's fantastic, let's go buy it. But it is still an interesting breakout here of the downward trend line. And this is, of course, from Tavi Costa. And I always like, the work that he does in terms of the gold, silver stuff. Most buying by central banks undeclared. Yes, we already agree with this. Of course, silver is being purchased by some central banks. Gold, we've long detailed the purchasing, especially since 2022, by particularly China and India and Russia. They've all been purchasing massive amounts of gold over the last couple of years, as I think we're in a currency war. So basically, this is a point where people go traditionally to gold, try to build giant amounts of holdings, and then potentially float a new major currency and try to get that done across the world. Remember, whoever has the major currency generally controls the financial systems in particular. Global gold production, one of the reasons we've liked gold for quite a while, especially the last couple of years, has been that no one's producing at faster levels. It's stagnant, it's flat. We're not seeing an oversupply, we're seeing an over demand. So that, of course, when demand is higher than supply, things tend to go up. Now let's talk about some stupid numbers. And of course, one of those is the GDP from the Atlanta Fed. Now, a lot of people have been worried about the GDP going bad and of course us falling into a recession straight away. And I actually polled you guys over the next 12 months, and I think 57% of you responded that you thought that the US would enter a recession in the next 12 months. Could be right. And then of course the rest of you said it wouldn't, but that's pretty close. It's almost 50-50. Now, generally speaking, the Atlanta Fed obviously had the GDP number going down, big time, and then now it's starting to pick back up. But could that still be completely wrong? Have a look here at the latest Challenger job cuts, January to May, over 2018 to 2025. Now, you may notice something a little bit disturbing about the current job cuts this year. Job cuts are surging in 2025 through to May as US employers have announced 696,309 layoffs. Now, obviously, there are hires coming in as well, but that's up 80% versus the same time last year. Now, this is just 65,000 away from surpassing all of 2024's total cuts. So we are in the first half of the year, not even, and we've already seen more job cuts this year starting to come through. And of course, we haven't seen that in non-farm payrolls. We're still seeing jobs coming on each month, and it's expected to be another positive one. But this is still potentially a bit of a warning sign. Remember, of course, this is an outlier thanks to the pandemic, but the one over here, I'm telling you what, that is a pretty large number, and we will be tracking that on the channel as much as we can. In terms of flows from foreign kind of money coming into the US, we are starting to see it pick back up as the markets recover and people look for areas to potentially make money. Of course, that hit a peak in January as everyone was speculating from overseas on the new presidency. It dropped off, and now it's kind of started to pick back up. So I guess that's a good thing for flows. But I think the GDP component, most of it, the best thing about it right now has to be AI. So we're seeing AI giving a massive boom to the US economy at the moment. And this is where a lot of the pickups are happening in these GDP revisions. And you can see here that this is now the largest expected contribution record and also record ever in terms of actual real US economy growth. And it's even bigger than the dot-com boom. So I think interestingly here, though, just before the dot-com boom blew up, we saw very similar reads. What's that mean? Oh, we'll have to keep tracking that one as well. But yeah, anyway, AI certainly contributing. And if we're taking a look at the bubbles, as you guys can see here, all the great bubbles in time, the Magnificent Seven obviously is up there with some of the biggest ones, especially, very correspondent to the internet bubble. Although this time, of course, these companies actually have real earnings versus none. Now, what about the next month? Well, the next month actually looks pretty decent. And that's because we had a fairly good May. Traditionally, the market will be bullish, well, at least in every similar circumstance when you're overlaying a lot of charts, the markets generally will be bullish in the month of June. And more importantly, the markets will generally be bullish more so in small caps. And we'll explain that in our next video on the weekend. So make sure to subscribe. We've got a cool chart there. It's also already posted over on our X account. Links in the description down below if you want to see it first. But yeah, there are some very interesting stats here for the right.
Kanye West made strategic stock investments on behalf of Kim Kardashian before their separation. He gifted her stock in major companies, including Netflix, which has seen impressive returns.
United Health Group sees increased bullish interest following a surge in call options and significant insider buying. Despite a challenging first-quarter earnings report, institutional support remains strong, with ownership at nearly 88%. Analysts maintain a moderate buy rating, with an average price target of $369, suggesting a potential upside of nearly 22%. The stock closed at $303, reflecting renewed investor confidence.
PepsiCo's stock has dropped over 25% from its peak, yet it raised its dividend by 5%, marking 53 years of growth. First quarter 2025 revenue rose 2.5% to $18.25 billion, but volume declined by 2% as consumers faced higher costs. The company anticipates earnings growth to re-accelerate through strategic investments in healthier options.